All right, welcome to Pulse Check, the first one of 2026. I am Scarlett Hall, Marketing Director for Pulse Financial Services, and I am here with Andy Umbach and Stephanie Anderson, our financial advisors.
Hello.
Hello.
All right, it's 2026 and midterm elections are this year. And there is absolutely a lot going on in the headlines. Investors may not be totally focused on elections just yet, but November will be here before we know it. And campaigning has already begun. The TV commercials are ramping up, and we're starting to see lots of talk in the headlines. The key question with these elections for investors is how might midterm elections influence the markets? So, Stephanie, I'm dying to know, did you bring your crystal ball today?
Gosh, I wish. No crystal ball, but we do have history, data, and a few decades of patterns we can lean on.
Okay, well, that feels like a fair trade. So, as we look ahead to November, what does history suggest we might see?
When it comes to midterm elections, history is actually pretty consistent. More often than not, the party that holds the presidency does lose seats in Congress. If you look back over the last 23 midterm elections, the president's party has lost an average of about 27 seats in the House and about 3 seats in the Senate. And gaining seats in both chambers, that's only happened twice.
Okay, so consistent for sure. Is there a reason that this tends to happen?
Yeah, there's a few reasons. One is motivation. The party that's out of power tends to be more energized to show up and vote. The second is approval ratings. Presidents often see their approval dip in the first 2 years, and that can motivate undecided or frustrated voters as well.
Yeah, and right now, control in Congress is pretty tight.
Very tight. Republicans currently hold a narrow margin in both the House and the Senate. Losing even one chamber could make it harder to move major legislation forward over the next couple of years and would shift the balance of power for the remainder of the term.
So, what does all of this mean for investors who are watching the markets?
Because this pattern is so common, markets usually start pricing it in fairly early. That said, the size of the shift and what it means for policy isn't always clear until later in the year. And that uncertainty is often what creates short-term volatility.
Yes. As we covered in our first episode of Pulse Check, which is why having a retirement strategy and staying focused on the long-term plan matters more than reacting to headlines.
Exactly. Politics is noise, but history reminds us that markets tend to adapt, and patient investors are usually rewarded. And America is resilient no matter who's in power.
Okay, so I'm guessing there's some data behind this too, right?
There is, and history gives us a pretty clear pattern. When it comes to midterm election years, markets tend to see lower average returns, and the range of those returns tends to be lower. However, there are a lot of midterm years with positive returns, including two of the best were 1982 and 1998, where the market was up over 20% in each of those years.
So between elections and all the unknowns, it's kind of sounds like a recipe for anxiety, right?
You're not wrong. Election seasons can definitely test investors' nerves. Campaigns tend to shine a spotlight on what's not working, negative messaging ramps up, and policy proposals feel vague or targeted towards specific industries or companies.
Okay, which can make the headlines feel especially intense.
Exactly. And that uncertainty often shows up in the markets. Historically, volatility tends to be higher during midterm election years, especially in the weeks leading up to election day. As you can see in this chart, the dark blue bars indicate midterm election years, and they increase like a crescendo leading up to the November election and then start to relax down again. This shows the increased volatility, the bigger swings of ups and downs in the market.
Okay, so there's actually data behind that feeling, which makes it even more important to stay grounded.
Right. Short-term noise can feel uncomfortable, but that's why having a strategy is so important to focus on your goals and the long-term plan that you built.
Okay, so years like this, what are opportunities or risks you might take?
I think this could be a good year for accumulators, for people actively contributing to their 401ks, 403bs, their joint individual or trust accounts. There are a lot of positives for the stock market. We have lower tax rates, lower regulatory hurdles, which is good for companies and businesses trying to build factories here in the U.S. Interest rates are possibly declining, so this increased volatility could be a good opportunity to buy good companies at lower prices. For retirees, again, strategy is important, and drawing off of investments that are not as volatile is a good idea, and that's, of course, the key foundation to retirement planning. But as you can see in this chart comparing the S&P 500 in midterm years and non-midterm years, there is much greater uncertainty through the summer and the fall until we hit the election in November. Then the markets tend to gain traction because there is more certainty, and the market's acceleration usually doesn't stop there.
Okay.
It keeps going into the year following the midterm election years. And you can see in this chart that going back to 1950, we have always been positive following the midterm election years. The average one-year return following the midterm election has been about 15%, which is nearly double the average over that same time period.
Okay, so the dust settles and the markets find its footing again. That's encouraging, but not a guarantee.
Right, and every cycle is different, and elections are just one piece of the much bigger picture. Markets are influenced by things like inflation, interest rates, trade, tariff policy, global economic growth, and geopolitical events, but you can see why taking advantage of a year of uncertainty can benefit your long-term financial picture in the coming years.
All right, so while elections can create short-term noise,
they can also provide great long-term opportunity.
Awesome. And that wraps up Pulse Check. If you have questions or want to talk through how all of this applies to your own strategy or situation, we're always happy to help. Thanks so much for spending a few minutes with us, and we're looking forward to checking in with you again soon. Bye.